Good morning. Good morning. Hope everyone's had a wonderful weekend. Blessings to you all. Let's get straight into it. So, a couple of trades called out this morning. What with it being Monday, it can be a bit awkward. So, I tread carefully. Based on last week's movement and the war that's going on, etc. Mondays are a great day for correction, as well as there's just so much stuff that you got to be aware of on each day. But the more that you trade, the more that you learn, the more that you'll understand this. So I won't go into too much detail today. But the reason why I mentioned that was because I'm sharing a trade that I gave this morning. And the reasons why, as you can see here, it looks like a 1-to-1. It's actually a 1 to 1.6. Okay. Now, I did have confidence in this, but just because I'm confident, feeling in a good mood, etc., does not mean that the markets are going to agree. So please do take your emotions out of trading. Okay. I'm not here bouncing around, jumping up and down, celebrating the wins, just like the same reason why I don't mourn and get real down and beat myself up when I get the losses. It's all part and parcel of trading. But nevertheless, if you get to the end of the day and the end of the week and you're up, then of course, throw a little celebration, withdraw some money, enjoy the profits. And, this is a full time thing for you if you want it. It's a part time thing for you if you don't want full time. And it doesn't need to be anything other than something running in the background for you if you want it done for you. But let me run through exactly why I did this particular trade in gold today. Anyone who's in the both free Telegram group and paid Telegram group will have caught this trade today. So first of all, opening of Sunday, so 11 p.m. on a Sunday is when the markets reopen for gold. And as you can see throughout the night, I went bed quite early yesterday. So as you can see throughout the night, we're going down. Okay. Now, this is very much against the trend, but just as I mentioned many, many times, the markets aren't elevators. They don't just go up, go across like there and drop back down. They're like stairs. Okay. They go up, down, up, down, up, down. Okay. So all this movement, this is just, bear in mind, this is just Friday the 13th, by the way. All this movement from 6 o'clock Friday all the way up was a huge push. Okay. Ended up being around about, I think, 500 pips. Yeah, something like that. Yeah, over 500. So whatever happens with that, the market does have to correct itself, okay? And it can use the next session to do this. So just to give you an example, this movement started in the London session at 8 a.m. Okay, here where you can see my mouse, I'll just draw a box here. Okay, this box here, just delete that one for you. This box here represents when the banks opened in UK. Okay, this is very important because this is when most of the volume and most of the money and liquidity gets put into the market. So you're more than likely to see the big moves happen at the opening of the bank session. Okay, 8 a.m. as you can see, big push, and then we've got a lot of little moves, but ultimately it's just continuing up. And then what happens here is when the US bank opens, it continues that momentum upwards. Now, the reason why this happened was, of course, the reasons I believe anyway is because of the war that's going on right now. Whenever there's a war or lockdown or any recession or anything like that, or basically fear or panic in the world and the economy, people buy gold because it's a metal, precious metal. It's a safe haven. The value's continuously going up over the years. When the economies are good, of course, they put money into money. And this is against the US dollar, as you can see here at the top left, gold versus US dollar. So what that means is that when the US dollar and the economy is strong in America, this will drop, okay, quite a lot. And that was proven last month. But when there's panic and there's war and everything like that, gold will rise because people put their money into it. So at the minute, people are pumping their money into it, right? But that doesn't mean, again, that doesn't mean it's just going to go and shoot straight up like a rocket. Although, okay, as you can see here, we had a great momentum move on Friday. So going back to why I took the trade here today. So first of all, 8 a.m. came, okay, and throughout Asian sessions, so throughout the night here in the UK, it's been pushing down and down and down. Now, if this is ever going to turn around and continue up its rise, then it's going to use certain areas and certain times. That's what's very, very important to understand about the markets in Forex, okay? It uses times of the day and areas to both, to change direction. Okay, so go over it again. We're going down from 11 p.m. last night, and we're currently at 11 a.m. today. So in the last 12 hours, let's say 10 hours, because I'll share with you in a moment why. So for the last 10 hours, it was going down. Okay, now if I just go back in time a little bit here to 8 a.m. Okay, you guys can see that these candles each represent 10 minutes, by the way. So all this is coming down here, right? Now we've reached this area. Now, obviously, this blue box isn't on everybody's tradingview.com. It's on mine because I placed it there as an important area. So, and I do that by clicking this little box over here and then just dragging it across, okay? So I've drew my box because, you gotta have an analysis. You got to look out for where, certain things happen throughout the day that when you come back to the charts and the markets, you want to be like, okay, that's where I was. It's a great way of keeping track of things, okay? So I've drawn this box. And the reason I've drawn this box here is because if the market is going to reverse, it needs to reverse from an area where it's done something similar before, okay? It's called an area of demand. If the box was above, it's called an area of supply, but I'll get into that at another time. Okay, so I've drawn the box from here. The reason why is because I can see some rejection candles here. They're represented by what's called wicks. Okay, these lines here. It means it's come down, but it's rejected. It's come down, rejected, and it's come down and rejected. Okay, so that to me tells me that around this area is where buyers will start coming in. Now, so that's sort of confirmation one, right? That's market structure, if you will, or price action. Now, the next stop is the fact that it's coming up to 8 o'clock, which is the bank opening in the UK. So let's see what happens. These are 10 minutes. It's 7:40 here at the minute. And then next is it goes into my zone, okay? Shows a little bit of a rejection here, but nothing too major. And banks open there, 8 o'clock. Now, look at that candle when it closes. That is what's called a doji. Okay, a doji is represented by like the cross. Okay, a cross like this, yeah. This little body in the middle, wick either side. What that represents is indecision, meaning that it's not sure if it's going to keep going down, and it's still not sure whether it's going to go up yet. Okay, but it means there's buyers and sellers in this area. Me being one of them. Okay, so let's see what happens with the next one. Right, quite a decent, a good push up, and then a little retracement back down, but a close of the candle above the previous, right? So it's higher than the previous, yeah, and it's quite strong. The body is quite big. Okay, that to me confirms that there's a lot of buying interest in this area, because this might be small to you and me that are looking at this chart, but that is a lot of money being pumped into the markets. Okay, that's what that represents. So I've already told the team that we're getting in. Now, I've put my stop loss at 1905. Now, the reason why is because you can get what's called a fake out. I've made my bias. I've made my decision. I have belief in the trade, which is the most important. But I'm leaving space. I'm leaving space for a fake out. What a fake out is basically like a move down and then a move up. Okay, like a night tick. Awesome. Yeah, so it will move down, try and bring a load of sellers in, so it makes you think that it's going to continue down and then push up, right? I weren't having none of that this morning. I thought this has gone into my area here. I'm happy. I'll put my stop loss above, so below, so I'm willing to risk 50 pips. And then as soon as I can, I'm going to move my stop loss to 40 pips, then 30, and then to break even. Okay, so then it becomes risk free. Let's see what happens. Okay. Also, I've put my target as 1915. That way, it's at least a 1-to-1. Okay. Now, you don't want anything less than a 1-to-1, because why would you risk more? Why would you risk losing more to gain less? In my opinion, I always aim for a 2 or 3-to-1 or as much as possible, but a 1-to-1 is the minimum. Okay. So 50 pip gain for a 50 pip loss. It's going to go one way or the other, right? I'm not in control of that. So let's see what happens. It's pushing up nicely a little bit, pushing up, but keeps rejecting above. Okay. Now it's broke out now. Okay. 9 o'clock, an hour later. So then you move your stop loss here to say, let's say 30 pips now. So I'm risking 20 pips less. Comes back down to entry. And again, pushes nicely up. So that's where I've told the guys, take some of your profits, put your stop loss to break even. Okay. So once you've taken some of your profits, guys, it means that you've closed and you've let's say you're £100 in profit. Okay. Just for example, take £25 off. So now you've guaranteed that 25, and now you're £75 in profit. Okay. Move your stop loss to break even. Means that it can drop down to 0 and take you out, but then you've still made that 25, right? I hope that makes sense. Let's see how the rest of it plays out. And then bang, a nice push up, hits the target for 1915. And I've told the guys, I've said I'm out, which I am. And the reason why is because that's the trade that I wanted. I still don't know where this is going to go today, but I'm going to go out very shortly. So I'm out for that trade there, and very, very happy to have collected 50 pips in the morning. A great way to start the day. Okay. And that's where we're at right now. It's not really moved much since in the last half an hour. So perfect, guys. Perfect. Okay. Now, again, let's just go over, because let me just go over a couple of things, because there's sometimes when I've been mentored or coached in the past, I've heard them talk about their wins, and I've also heard about them talk about their losses, right? However, what I haven't heard a lot of is their response to what they would have done if they lost. Okay. Now, this is very important, guys, because a lot of you when you're trading, can have a bias of where you think the market's going to go. Basically, a bias means where you believe it's going to go, right? And when it goes against you, so this isn't one, but let me just use this as an example, right? Let's say here, this is where you decide to get in. You're getting up at 4 in the morning, right? UK time. And let's say your bias is to put a buy in. Okay. Let's say, for example, your zone was here, right? Okay. Your bias is to buy. So you've seen it come to this area, and it's rejected this area. And now it's also rejected it once again. So you've got in. Okay. Let's say you've aimed for the 1-to-1 here. Okay. You're in the trade, and then you're thinking, yeah, this is going quite well. I'm in profit. Oh no, bam, it's taking you out, right? But of course, your bias is that you're in buys. So what do you do in this situation? Because a lot of people really, really struggle with either FOMO, fear of missing out, meaning that they're going to try and get into a trade too late, or revenge trading, meaning that you're determined that you're going to get buys in, right? You've lost this one, and then you're down here, and you're like, right, there's another rejection. I'm going to get in here then. Okay, bang, it's taking you out again, right? This is where it's very important. So your bias for the day is buying, right? Now, what it means is that you need to do a few things. Number one, stick to the same lot size and same risk to reward. Okay, these two are very, very important. Now you've gone up here, for example, you've lost 30 pips. You were risking 30 pips and to gain 30. Okay, then you lost 30, so you're minus 30 now. Then you did the same here, so you're minus 60. Okay. Now, as the day goes on, you're going to start to lose a bit of momentum and get a bit annoyed with the markets because you had your bias, you've lost. So now what a lot of people do is they'll completely flip it around. Okay, they will then go, right, I'm going to go with some sells. Right, market's selling. I'm going to go sells, and I'm going to make my money back doing that. And then what would happen is, of course, your sell's gone out. Now you've lost 3. Okay, if you manage to stick to the same lot size, that's great. Great discipline to stick with that. The same risk to reward, great. But you're changing your bias. Now, what you need to do is you need to understand timing. Okay. Now, a lot of people don't think of that part, right? They think, right, I'm in this session here. I'm going to trade. But if you've got a bias, then there's a perfectly good reason why. For example, you think that you're going to, it's going to go up. Right, so you've got in here, like I mentioned earlier. Let me just move that back for a second. Yeah. Right, so you've made your buy, and then you've missed out there. You made your buy here, you've missed out there. If you'd have stuck to one more buy, so 3 to 1, you'd have won. Okay, which means now you just need one more trade and you're back to break even. Okay, which is frustrating, but it's good. So the point I'm making is that stick to your risk to reward, 1 to 1, 1 to 2, 1 to 3, whatever it may be. Okay, the better, the more, the better. So if it's 3 to 1 is the best one to aim for, because if you hit stop loss twice and then take profit once, you're still in profit. Okay, so it's a good take profit. It's a good risk reward to have. However, the important thing is to stick to your beliefs unless the market has gone through 2 sessions, right? Now, allow me to explain what I mean. So this session here, where I've just explained that you lost twice, was the Asian session. Now, if you want to know what session is what, then the easiest way to do it is using this indicator, session bar color, in brackets US time. Because normally my candles are black and blue like that, as you can see. But once I click this, it changes the candles to represent what session I'm in. Red is US, black is Asian, green is London. So if you're in the black session, right, and it's been going down and you've lost, then at least wait for the next session to open. And then you would have seen that the Asian session was simply grabbing liquidity and pulling it down. Okay. The UK session has pushed it back up to where it is right now, which is right here. So learning about timing is very, very important. Now, the best times, I'll explain these in my group. 8 a.m. is the London Open. 7 a.m. you can catch a good move, usually. 1 p.m. is the US Open, and 2 p.m. is New York Open. But the most important one, 2:30 p.m. New York Stock Exchange Open. Okay. These are the ones I use because I'm in the UK. You can use the Asian ones at 2 a.m. for the Japanese one, the Japan Tokyo, sorry, or 11 p.m. for Sydney. It's up to you depending on when you want to trade. But just do not revenge trade too much, right? If you've hit stop loss around about 8:30, wait till 9 o'clock, and then usually you'll get an opportunity to get back in. Let me explain how. So if I show you here, for example, right, we'll go back to this one, 8 a.m. Right, you went to get into a buy, but you missed your opportunity. Okay, and if I go down to the 5 minutes, it'll probably be a bit better. Right, it's here. This is the best place to get in because it's the lowest in the UK session, yeah, which is 1908, or let's say 1909. But it's around here now, and you're thinking if you're not quite sure, right? Because it's showing rejection candles here. The best thing to do is wait for 9 o'clock. Okay, the next hour. Let's see what happens. Okay. If you waited till 9 o'clock, you see here, look, 9 o'clock, it's pushed out. It's giving you a change of character or break of structure or market shift structure or whatever you want to call it. It's a strong candle that's broken this line here. These are rejections, meaning that it's struggling to get past this level. And now this is shown at 9 o'clock that it's worthy. Captain America's coming and now it's worthy. So you could literally do something like that. And if you've seen, you'd have got in whenever it was, 1912 up to 1914, 20 pips. Okay. You could have then, obviously, you've seen after it's come shot back down. Again, another opportunity to get back in. And as you can see, it's flew. So, yeah. We're 1-to-1, weren't we? They are 1-to-1 now. And 1915, yeah, 1915 and 1-to-1 there. So as you can see, the second opportunity came. It was actually 9:30 today, but 9 o'clock again, you would have been fine if you wait till 9:30. The important part to remember is that 8, 8:30, 9, 9:30. These times are very, very important. First of all, see where the market is, and then wait for these big candles, these big breakout candles. That's shown that strong buyers are in, and then obviously now it's come back down to re-enter. And if I look on this Fibonacci here, you'll probably see I haven't got all the numbers on. 6-1. Yeah. See here, it bounced right off the 0.61 area. Okay, depending on what tools you use, what indicators you use. Obviously, I was already in down here, so I would not have re-entered here. I like to. Oh no, sorry, where? Oh yes, yeah, I would have. Apologies. So the top of the fib here, from the bottom where the push initially happened, and then re-entered at the 0.76 area, which was perfectly placed here, and then ready for its move up, guys. So if you feel like anyway, to put it in simple terms, guys, if you missed the 8 o'clock push, okay, so this would be the best place to get in, then wait, okay? Just wait. Don't try and get in here, because you're just going to be in more drawdown than you need to be. If you still think it's going to go up, wait till you get a good drop down. This area would have been perfect for a second entry, okay? Because it's a retracement. So you've had your initial push up, little retracement, big push up, back, drop down, boom, and we're away. So anywhere this area would be great. This would be your first best place to get into. And of course, I mentioned at 8 o'clock, if you're in the group, that I mentioned a buy, and everybody's profited for this morning. Wait for the US session at 1 o'clock, and we'll go again. What other trades did we have this morning, ladies and gents? Okay, that's where we're at right now. We had the NAS. This is the trade that I called out this morning. Okay, let me go over why. So first of all, if you look here on cnbc.com, you'll see under the section you've got stocks, Dow 30 and NASDAQ 100. Okay, when you click on this at 8 o'clock, it updates. Okay, updates at 8 o'clock and again at 2:30 or 2 o'clock, and it will tell you all this. All of this red news here shows that it's not good news for these stocks. Okay, and if there's more red than green, which there is on this occasion, then we're more likely to going to be looking for sells because the news is not good for NAS. If it's not good, it's going down. Okay. And you can catch this at 8 a.m. and 2 p.m. or 2:30 p.m. when the news is updated. So let's go through what I saw. Just so what the reason why I called it out. So first of all, the volume bar here is called SVP, right? Now, I've not changed any settings. You can get this on the tradingview.com and it's the pro version. So you have to pay, I think it's 20 or 25 pound a month for this, but it's very handy to have. So I click that on, and where the red line appears, that's where I will be looking for my entry, whether it's a buy or a sell. Okay. Step 2 is the 8 o'clock session opening. So if I just show you, yeah, on the 30-minute candle here, as you can see, there was an indecision candle, meaning that it's been coming up throughout the night, bit of consolidation, but now it's unsure. Okay, the reason why it's unsure, I believe, is because the news hasn't been released yet. It's 7:30. The news gets released at 8. Okay, now the news has been released and it's negative for NAS. We've had a huge push down. You see this here? So what I've done is almost immediately here, more indecision candles, 8 o'clock. I've got in here, right here, on this drop. Okay, I've called this in the premium group, not the free group. The free group doesn't get the NAS and the US 30 ones. You know, you gotta leave some for suspense, haven't you? But anyway, tight stop loss. The stop loss above here, the reason why is because of the liquidity areas here, these represented by these spikes. Okay, you could call this one here as well. But I didn't want to go that far, but you know, maybe I would have, because I like to monitor my stop losses anyway. But yeah, anyway, stick to what it was. Big nice push down, and the target is here. Why is the target down here? Well, the lowest it was on the UK session on last Monday was here. This was the lowest, so it can target the previous lows. Also, this is a low for the US session as well. So if it breaks through this area here, represented by this lovely arrow, if it breaks through this, it's going to be targeting this area here. Okay. And at the minute, it's looking very good. Right, so let's just rewind time again. Hope you guys are all enjoying this show. Rewind time again to 8 o'clock, right? I've been looking at the charts. I've saw some spikes above here, right? We're also at a high, quite high here, to be fair. There's a room for it to go down here. In fact, this is very simple terms. I'm not going to go into all the technical jargon and all that, but that's what that's represented. So we just go forward a little bit to 8 o'clock. Okay, we can see a good momentum candle pushing down here at 7.50, which is, to me, that tells me that the guys already know the news. You know, there's people that are 10 minutes ahead of everybody else. They've banked some money just here before everyone else. You know, the big guys. Right, now, as you can see there, boom, right, immediately, there you go. Immediately, we've seen the candle break down, okay? I've looked at the news, seen it mainly red, posted that in the group to confirm that with everybody. Stop loss above here. You don't want it too far away on NAS because that moves quickly and can take all your money. And take profit below. But of course, just because I set a target or take profit does not mean it's going to get to there. So guys, when you are taking my trades, just remember, whenever you get to your target, if you see a certain amount, 1,000, 100, 500, 5,000, whatever it may be, 50 quid, 5, I don't know what your targets are. When you get to that, get out. Enjoy the fact that you know you've got your trade, you've done. But as you can see, it's shot down and it's rejected this area. Why has it rejected this area? My reasoning is because of a previous rejection, right? Whenever it gets to an area that's a big buyer is coming before or a rejection, it's more than likely going to do a very similar thing. Now, it doesn't mean that it's going to do what it did last time and go right up here, but it does mean that maybe the same buyers are here waiting, or they've set buy limits, meaning that They don't need to be at their screen, at the computer. They've set a buy limit. If it reaches this area, put in a buy. So what that does is that drives the market back up, okay? Which is why you've got to be careful. A lot of people will set take profit 1 at this area and get out. Me, I believe that this can continue down until at least 12 o'clock. So we'll see what happens. And as you can see, it's come back down into this area. It's rejected again, right? A double bottom. So now that tells me it's a bit of a stronger confirmation to say that buyers came in here, but buyers have come back in again. So maybe, just maybe, we might need to look at it. But what I've done already is I've taken some off here when it reached this area. I've moved my stop loss to break even. So now even if it comes back up this area, we're still in profit, okay? It's quite dangerous. Well, not dangerous, but you just have to be a bit more careful when trading the NAS or US 30 outside of US session times, because obviously it's NAS 100 is the 100 of the US best stocks. Dow Jones 30 is the US 30, which is 30 of the best stocks, different type of stocks. So obviously they're going to be best represented during US bank times. But does it mean we can't bank some money ourselves during these sessions, which is exactly what we've done this morning, guys. So absolutely well done to you. I think, guys, that's enough for today. Don't want to give too much away, do I? But just to throw on there, guys. Remember, you don't need to know any of this stuff to get involved in Forex. All of it can be done for you. Had 2 new members this weekend, which is fantastic. And the word is getting round. But I am more than happy to teach anybody who wants to trade these and do everything yourself. There are some people who like to control their money, control their accounts, control their finances. Very, very I respect that a lot. And there's also those that just enjoy learning, like myself. So I'm more than happy to teach you, because I always learn from everybody that I teach. But ultimately, there's people out there that love the jobs they do, love the family, love the careers that they have, but just notice that their careers could pay them probably a little bit more. There's some people out there doing better jobs than I'm doing, much more respectable, and making a much bigger difference. Example like doctors and nurses, for example, teachers are doing it as well. I have a lot of respect for them, but it's no secret. You don't have to look very far. A simple Google search will say that you aren't being paid the amount that you deserve or that you should. And the reason why is because the bigger guys, the governments and the companies, they want most of the money. And for me, this is a way of getting a balance in the books, so to speak. Having an extra income coming in, so you can continue doing what you're doing, but knowing that you're not just doing it for money. You're not paying more out than what's coming in. And yeah, guys, if I can help you guys achieve that, that's fantastic. But it does require something from yourself. It does require either a small or a large upfront fee, depending on just how much you want to make. But I'm going to keep trading, going to keep these lives going to keep posting, going to keep hopefully inspiring you guys, and seeing what more I can offer. But in the meantime, everybody's happy with what they've got so far, and almost everyone's happy. Got a few people who still need to get on board, but yeah, no rush at all, guys. Live life, enjoy it, and have a good one. I'm just going to continue recovering. It's been 1 week now officially since I broke my foot. And, it's not been a bad week. Anyway, guys, have a fantastic day, and I'll speak to you on the other side. Bye-bye.